Hi everyone, in this video I'm going to highlight which is the better stock to buy, fuboTV or DraftKings. I'm going to look at a few different metrics to answer that question, so let's get right into it. First, let's look at the price change in 2022. Both of these stocks had a tough year in 2022. Fubo stock falling 89%, whereas DraftKings fell 58.54%. So let's look at their overall revenue in the trailing 12 months. Both of these companies are fast growing, innovative stocks. Fubo TV has grown from less than 250 million in trailing 12-month revenue in July of 2020 all the way up to 919 million in trailing 12-month revenue. DraftKings similarly less than 500 million in trailing 12-month revenue up to 1.86 billion in TTM revenue. Both of them growing fast. Growth is not their issue here, and I'll highlight what is their issue, and that is profitability. This chart highlights net income for DraftKings and Fubo TV. Looking at Fubo TV in the orange, we see its net income just going down, falling as revenue has grown. Its net income has fallen more. It's down to 152 million in its most recent quarter. Similarly with DraftKings, as it has grown its top line, its net income has falling to 450 million in its most recent quarter. Uh, in this regard, I feel DraftKings has better profitability prospects. Um, Most of DraftKings expenses are in sales and marketing to attract customers. Think promotions, advertising, sign up bonuses, reload bonuses to get people to sign up to their online gaming platform. Whereas Fubo TV's largest expense is subscriber related content costs. So Fubo aggregates content and then sells it to its subscribers, but it pays so much for that content and it's not charging its customers enough to generate profitability. And I just don't see how that's going to balance. So, longer term, I feel DraftKings, yes, right now they're spending a lot of money on sales and marketing to attract customers, but I can at least see a path down the line 3 years, 5 years, 8 years later, once they've expanded to all of the states for sports betting and iGaming that they feel they're ever going to expand to, they can bring down their sales and marketing expenses and their core business it can be profitable. I'm not that confident in Fubo TV's core business achieving profitability. I'm not sure they can ever sell that aggregated content that they're paying for at a higher price than they're paying for it right now in order to generate profitability. Or even if they do, I don't know how much of a difference that's going to how much of a margin that's going to create. Next, let's look at cash flow from operations. Again, TTM, which stands for trailing 12 months, and both of them downward trends. Fubo TV losses of 344 million in its trailing 12 months. DraftKings losses of 649 million, but at least DraftKings cash flow from operations losses trended upward at least for one quarter. We don't see any positive signs for Fubo TV in terms of cash flow from operations. Finally, let's look at valuation to determine which of these stocks is a better buy. Now remember, each of these stocks, they're losing a lot of money on the bottom line with business models that have yet to be proven. So these are very speculative stocks, only reserved for those investors that are looking for high risk and high reward, right? If you can tolerate a high degree of risk in your portfolio, should you consider any of these two stocks, right? But if you had to choose one of these two stocks, looking at the valuation price to sales, DraftKings is at 3.295, Fubo is at 0.411. According to this metric, DraftKings is much more, nearly 8 times more expensive than Fubo TV in this metric. Still, if I had to pick one of these two stocks to buy, I'm choosing DraftKings here. And it's because of what I mentioned earlier. I'm more convinced in the path to profitability for DraftKings than I am with Fubo TV. Therefore, I'm more skeptical of fuboTV's sales because I'm always skeptical of sales at losses, right? You can sell anything if you're willing to sell it at a loss, right? You can sell $100 bill for $50 all day long. And I'm skeptical of those kind of business models. I can at least see a path to profitability for DraftKings once they expand to enough states, to enough markets, and they can eliminate or at least reduce significantly those sales and marketing expenses. For that reason, I like DraftKings in this comparison. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.